Silver just crossed $81 an ounce, and the people who were supposed to see this coming are still catching up. While they scramble, you're already here. You're watching SHF Money, which means you already knew something most people didn't. If this is your first time, hit that subscribe button right now. Hit the like button too. Because what we're about to go through today is not a conversation you're going to hear anywhere else. This is not analysis. This is a quiet wealth transfer happening in real time, and you are watching it move. Let's talk about what's actually happening. Silver today is sitting at $81 an ounce, up $2, up 2.5% just today, and gold is above $5,000 an ounce. $5,000, let that number sit for a second. A year ago, most people laughed at that target. Now it's the floor. The gold-silver ratio right now is sitting at 62. That means it takes 62 ounces of silver to buy 1 ounce of gold. That ratio is shrinking. Silver is moving faster than gold. And when silver starts moving faster than gold, historically, that is not the beginning of a run. That is the middle of one. Now look at the global asset rankings. Silver is currently the third largest asset in the world by market cap. Third, behind only gold and Nvidia. Think about that for a second. A physical metal that you can hold in your hand is now worth more than almost every company on earth. More than Apple, more than Microsoft, more than every bank you've ever been told to trust. Silver is sitting at number 3, and it is only a few dollars away from taking the number 2 spot and sitting right next to gold where it belongs. Bitcoin, by the way, is down at number 13. 13. The asset the internet told you was going to replace gold is sitting at 13 and falling. Silver is sitting at 3 and climbing. That is not an accident. That is not random market noise. That is the beginning of a massive repricing event that most people are going to recognize only after it's already happened. Now let's talk about what's pushing this. Because it's not just one thing. It never is with a move this big. There are 3 forces working together right now, and when 3 forces like this align, prices don't just go up. They go up and they stay up. The first force is geopolitical. Right now, the United States has assembled the largest military presence in the Middle East since the 2003 invasion of Iraq. The largest force in over 20 years. The tensions between the US and Iran are escalating fast. And every time a conflict heats up in a region that touches global energy and trade, money runs. It doesn't walk. It runs. And it runs directly into gold and silver. It has done this every single time in modern history, in every conflict, in every crisis, in every moment of fear. Precious metals absorb that capital. They always have. And if anything significant happens in the Middle East this weekend or into next week, you are going to see gold and silver move again. Maybe sharply. Keep watching. The second force is the dollar. This is the one nobody wants to say out loud. There is a serious argument being made at the highest levels of finance right now that the United States needs gold and silver prices higher, not as a nice to have, as a matter of national survival. The United States currently runs a massive trade deficit. It owes the rest of the world an enormous amount. And one of the only ways to reset that without a full financial collapse is to let the dollar weaken while gold and silver rise. A weaker dollar inflates away the debt. Rising gold rebalances trade. Rising silver, which is critical to every piece of modern technology we build, becomes a strategic national asset. This is not speculation. This is being discussed in policy circles right now, and the people who move markets ahead of policy are already positioned. The question is whether you are. The third force is gold itself. Gold has now outperformed the S&P 500 over 1 year, 2 years, 5 years, 10 years, 20 years, and 25 years. Let that sink in. 25 years, a full generation. If you had put your money into gold 25 years ago instead of the stock market, you would have made more money. More money than the people who told you to buy index funds. More money than the advisors who pushed you into a diversified portfolio. More money sitting in something that doesn't pay dividends, doesn't have earnings calls, doesn't have a CEO, just metal. And the people who understand this, the serious analysts who look at decades of data, are now saying gold is going to $15,000 an ounce, maybe $25,000, over the next 10 years. Because the math requires it. Because the trade deficits require it. Because the military-industrial equation requires it. The U.S. cannot afford to let other countries, specifically China, finance its military and manufacture its weapons at the same time. That is a national security trap. And the only way out is through a higher gold price that resets the global balance. If gold goes to $15,000 an ounce, ask yourself where silver goes. Just ask the question. Let's talk about JP Morgan. Because even the big institutions are starting to say it out loud. JP Morgan has publicly set a silver price target of $85 an ounce. They have also said silver will average $81 an ounce this year. That is more than double the 2025 annual average. More than double in a single year. Now, the 2025 annual average price for silver was $41.50. That was already a record. And right now, in 2026, silver's annual average is already sitting at $95.89. We have already blown past the 2025 record. We have already more than doubled it, and the year is not over. Goldman Sachs is now projecting silver averages between $85 and $100 per ounce for all of 2026. Goldman Sachs, the institution that has spent years pushing stocks, bonds, and managed funds, is now on record saying silver should average between $85 and $100 this year. That is not a fringe prediction from an anonymous account online. That is the institution managing trillions of dollars telling you where they think the metal is going. When Goldman says a number, it is usually because they are already positioned there. Think about that. Now, what about the downside? Because you need to understand the floor. Some people online are calling for silver to fall to $55. That is the bearish case. And look, it cannot be completely dismissed. If there is a serious deflationary event, if the stock market crashes and people are forced to sell their most liquid assets to cover losses, silver could get hit. That has happened before. It happened in 2008. But here's what the people watching this market closely are saying. The recent low tick down to $64, the one that scared a lot of people, that felt like a bottom. Not a random bounce, a real structural bottom. The kind of floor that forms when large money decides it has seen enough downside and steps in. The kind of bottom that only becomes obvious in hindsight. Most people who sold at 64 are either already regretting it or they are about to. And now there is something else you need to know about the floor. The United States government, through the Office of the Undersecretary of State, has publicly stated that they are developing a price floor system for critical minerals, a government-backed price floor. They have described it as sophisticated. They have said multiple agencies have been involved in designing it. And they are already in conversations with allies and partners about implementing it. Silver is a critical mineral. Silver is not optional for the modern economy. It is in every solar panel. It is in every electric vehicle. It is in every chip, every circuit, every defense system. The government knows this. And if they set a floor, and the conversation is already happening, then the downside risk for silver changes completely. The worst case scenario gets capped by policy, and the upside case becomes a matter of how far above the floor the market runs. What will that floor be? $50? $60? Maybe $80? Right where silver is sitting today? Nobody knows the exact number yet. But the conversation is happening, and the fact that it is happening at all is a signal, a very loud signal to anyone paying attention. Here is something that almost nobody is talking about. Silver's inflation-adjusted all-time high. In January of 1980, silver hit its historic peak. When you adjust that price for inflation, the true all-time high for silver is around $150 an ounce. We are sitting at $81. Silver is still, at this moment, sitting below its real all-time high. Below it. After everything that has happened in global markets, after all the money printing, after all the inflation, after gold has absolutely exploded past its old records, silver still has not hit a new inflation-adjusted all-time high. That means silver is still cheap, relative to what it has been before, relative to what money has done, relative to what gold is doing. Silver is still unfinished. The move to $150 is not a fantasy. It is the return to a previous real price level. And there is a strong case that it gets there this year. Now let's talk about something that has never happened before in silver's history. For the last 9 months in a row, silver has finished higher than it started. 9 months straight. Every single month a gain. In the time it takes a human to fully grow from conception to birth, silver has not had a single losing month. That streak has never existed before. The previous record for consecutive winning months was somewhere around 5 or 6. We doubled it. And right now, sitting at $81 and entering the final stretch of February, if silver holds above $79 by the end of this month, we will have 10 consecutive winning months. A record that has never been seen before in silver's trading history, 10 straight months. That is not normal market behavior. That is a structural repricing, the kind that happens when the underlying demand equation for an asset fundamentally shifts and the market is working to catch up. The kind that happened to oil in the early 2000s. The kind that happened to gold starting in 2000. The kind that rewarded people who were early and punished people who waited for confirmation that never felt comfortable enough. About a year ago, silver was sitting at $32 an ounce. In January of this year, it surged to over $116. Intraday, it may have touched 121, maybe 125, depending on the data source. Somewhere it has never been before. It pulled back. It always pulls back. But it closed January at $79. And now it is at 81 and climbing again. The people who sold at 32 are not going to get that entry back. The people who sold during the fear at 64 are already watching the price move away from them. This is how wealth transfers work. Not in crashes, not in explosions, in quiet, sustained, relentless moves that most people don't recognize until they are already on the wrong side. Here is what you need to understand about this moment. The institutions are positioned. The government is building a floor. The geopolitical pressure is building. The dollar is structurally weakening. Gold is on its way to numbers most people still think sound insane. Silver is still below its real historical high, and the average price this year is already double last year's record. None of this is hidden information. All of it is in public statements, public filings, public reports, but it is scattered. It is not packaged in a way that makes the full picture obvious until you put it all together. And when you put it all together, you see what is actually happening. A generational repricing of real assets, a quiet exit from paper promises and into physical things that governments cannot print, a transfer of wealth from people who trusted the system to people who understood what the system was actually doing. The question right now is simple. Not what is silver going to do? It is going up. The data says that, the institutions say that, the government floor conversation says that, the 9-month streak says that. The question is which side of this move you're going to be on. The side that got in while the story was still being told, or the side that understood it fully only after it was already history. There's no shame in where you start. There's only the choice you make right now with the information you have. Silver is at $81 today. Gold is above 5,000. The ratio is tightening. The streak is building toward 10 months. The floor is coming. The institutions are already inside. And you're watching SHF Money, which means you are not behind. You are here. What you do with that is entirely up to you.